questions. I don't know if it's the
Okay,
same for others around me.
I am recording now. Let me see if it's the same thing.
Okay, no, it's working.
Oh, it's working, because the reason why it does that is, remember, most of you probably signed up as underage, and when you record someone who is underage, it's probably not allowed. That's why whenever I start recording, most of you would have to be unmuted. But now,
yeah, 100%.
It's recording, so I believe that that issue has been resolved. Okay.
Yes, sir.
Remember, I need you to practice. I need you to participate. I need you to ask questions. I need you to give your contributions. If there's a part that you already don't understand, please make sure that you ask for clarification. It will just not be fair if you ask me what is an authorized share capital or what is a share premium. That will not really be fair, because that will really take us back. Maybe I can answer you, but then it will really take us back, and it really will waste a lot of our time. Okay, now with company accounts, there are 4 things that you need to know. There are 4 things in company accounts when it comes to practical. Of course, there's theory and there's C&D questions, but when it comes to practical, you need to know issue of shares, recording issue of shares. Now, this recording issue of shares, it's in the general journal and general ledger. If you know one, you are likely to also know the other one. So that's the first thing that we need to know. The second thing that we need to know for our syllabus is calculating dividend. That's the second thing that we need to know. And then the third thing is income statement of a limited company. And then the fourth thing is the statement of changes in equity. And then number 5, statement of financial position. These are the 5 things that you need. Now, for the exams, any of them can be asked, but there's so much marks that are allocated to these 3. There's so many marks that are allocated to these 3. But unfortunately, for most of these things, you won't be able to do these 3 if you can't understand the recording of shares or the calculating of dividends. So I know we only have an hour, and we don't really intend on making this this class longer, especially the video. I need, by show of hands, who already knows how to do the recording of shares. Here we have exercises up to exercise 7. So if you already know, I'll just give you this information, then you go and practice. Let me just see by issue of hands. Who already knows? Rejoice already knows. Hilma, and Jabula, Mateus, Loide, Grace, Benedict, Alicia. Okay, this is good, because if we already know, then we don't have to waste time with the issue of shares. Datila, blessings. If we can be more than half, then we are good. We are how many in the class? 10 people already know. But how many are we in the class? We are 27. So that we don't waste time on things that you can do. Okay, here some people lower their hands. Maybe they are not so confident that they know. Okay, so only 8 people knows. out of 27. So maybe it's just fair that we run through, but like I said, running through would now require that the video is either too long or we don't go to the other things. So it's okay. You can I'll lower all your hands. Okay, perfect. So we can quickly run through. We'll go through one exercise. I'll go with one exercise with you, and you'll do one while I'm here, and then the rest you'll do them at home. Let's start with 7 because I feel 7 is more comprehensive. Like I said, is it 7? There's one more that was comprehensive that has. Oh, why was this one having balances? Okay, that would have been a nicer one. Like put balances on there. Okay, we are going to do this one. Etosha Limited is Etosha Limited is a limited company with an authorized share capital of 500,000 ordinary shares at $4 and 200,000 5% preference shares at $2. So we are not going to explain what is the difference between preference, authorized, ordinary, and so on. The following information was available on the 1st of January 2024. So these we know are the balances. And when you see balances, that means it's balance brought down. Balance brought down. Where do we write the balance brought down? On the side where the account is increasing. So that's not a problem. We have done quite a number of things that are like that. Now, this is the information that we need. When the issues are when the shares are being sold, because remember I told you, the first thing is recording the issues of shares in the general journal. The first exercise was about general journal, but I rather want to show you with a general ledger because if general ledger also incorporates the balances, and if you can do the general ledger, you are likely to also do the general journal. Now, this one I'm going to show you. If you have a question, you unmute and you ask that time so that I can clarify. But I just want you to follow. After that, we are going to do the next exercise, all of us together. Not together, but you'll do it and then we'll give correction. On the 15th of January 2024, Etosha issued 150,000 ordinary shares at a premium of 80 cents and 400 preference shares at par. Now, this is the par value of the preference shares. So we know these shares were issued at the par value, which is the same as the nominal value. This company already issued shares because here we can see 920. So we don't know how many they are, but we know the total value is 920. If you want to find out how many they are, then you have to divide this 920 divided by 4 so that you can find out how many shares they were. But for now, we just know in monetary value, it's 920. Now, we want to find out in terms of money, ordinary shares, how much did we receive? Or maybe before we find out how, in terms of money, we can record the balances that are given to us. So the balances on the 1st of January 2024, so I can record these ones. Just to reduce the font a little bit. So it's 2024, font is still big. 2024, January the 1st. We know balances for capital because these ones are just the same as the other capital accounts that we have lent, 920,000. And then for preference shares, it's also given. Okay, I didn't give for bank because these exercises I just do them. And sometimes you just notice you have done something wrong after when you are doing the exercise. I didn't give the balance for bank, but it just makes sense that the company with a share capital of this amount must also have bank. But it's okay because it won't really affect what we want to achieve. So preference shares is here, it's on the credit side. If you have this question, you unmute and you ask. January the 1st. Then we have balance brought down of 46,000. So what I did now, I just recorded all the balances on the side where the account increases. Now, which one is the easiest to record? Preference shares is the one that is easy to record because it's not complicated. So for preference shares, all you do is you just take 40,000 multiplied by the par value. Then in that case, we know it's 80,000. So the preference shares that was given here, it's 80,000. It's bank. I think all the exercises I didn't indicate that it was paid by bank, but in our syllabus, we don't have allotment, application and allotment. But in practically, we have application and allotment. What is application and allotment? It's where you apply and you wait to be allocated shares before you can pay. So there's usually a separate account for application and allotment, but you don't need to worry about that because it's not part of our syllabus. And this was done on the 15th. So for now, we assume that everything that was paid, that was issued, was paid for. Okay, so I hope we get this one. Where did we get this one? On the 15th of January, Etosha issued 150 ordinary shares at a premium of 80 cents and 40,000 preference shares at par. So the 40,000 preference shares at par, which is $2, it's what we are doing now. 40,000 times $2. Then we put it on the credit side, it's paid by bank. Now, and I said preference shares is the one that is most easier to record because you don't have to struggle with how much is the premium, how much is the ordinary shares. Now, when you come to ordinary shares, I'll put the note here. Note, because this is sometimes where learners make a mistake. Ordinary shares always multiply with the par value or the nominal value. This value that you find here, always, sometimes they will say the ordinary shares were issued at $5. Forget the $5. Just go and look for the par value. The ordinary shares were issued at a premium of 80 cents. Forget the 80 cents. Just go look for the par value. Ordinary shares are always issued at par value. Now, or not always issued, but always calculated at par value because they can be issued at a higher amount, but then you only calculate the par value. So in this case, there are 150,000, even though they were issued at a premium of 80 cents. You just multiply with the $4. And then I think this will give us 600,000. Like I said here, I'll just give answers. If you have a question, you unmute and you ask. Now, this is our ordinary shares. This 80 cents at the premium, it's like they are saying at the profit of 80 cents. Now that profit, that premium, that extra amount is what we call the share premium. So you are going to have a separate calculation. You are going to have a separate calculation for share premium, which is 150,000 multiplied by 0.80. And I need now to give you the answer here. I hope you are all following. 150 multiplied by 0.80, 120,000. Okay. So we know this is the share premium. Before I record them in, I just want to run through the other exercises. If you check it here, nominal value of the ordinary shares is $3, but we issued at $4. Forget the $4 when you are calculating the ordinary share. Just say 400,000 multiplied by $3.50. That extra 50 cents, that is for share premium. Then the next exercise says ordinary shares, the authorized share capital is $5. At incorporation, the company issued 600,000 ordinary shares at $6.50, $6.20. When you are finding out how much is the share capital for ordinary shares, forget the $6.20, just say 600,000 that was issued multiplied by the nominal value. The extra $1.20, which is the extra amount here from the $5, that one is the share premium. Last example, the 500,000, the authorized share capital is 500,000 at $1.50. This is the nominal value. Ordinary shares are always calculated at original value. So you take the 180 multiplied by 150. This $1.80, you forget about it. You must just check the difference. In this case, the difference between the two is 30 cents. The extra 30 cents is the share premium. I hope that's now clear. If it's not clear, you ask me. Otherwise, we go back to our exercise. Now we go to the ordinary share capital account. It's here. The date is there, 15th. Just need to maintain the same color. Bank. We assume that everything was paid for by bank. Anyways, that's a lot of money to pay by cash. And if you are paying the stock exchange, you can go there with cash. 600,000. This is this information for ordinary shares. Now the share premium, which was an extra one, we come here, still on the 15th. Bank, I think it's 120,000. Now all these things, you have to close them off at the end of the financial period, even though it's not indicated here. Let's assume that that was for January. Let us assume that it's for December 31st. Now someone might ask, because there are also some questions that were like that. If the shares are issued on the 1st, when do we close off? When do we bring down? In the past, it was confusing because we don't know, should we bring down on the same day or should we bring down on the next day? But now all the questions are always going to specify. Close off on this day, bring down the balance on this day. So that one is something that when you go in the exam, you must not even worry about. Just look at the questions. So here it's now balance, carry down, and then you add the two, which I believe it's going to be 1,420,000. If I'm not mistaken, 145. It's actually 145, 1.520,000. You already know how to balance. We know we must draw double lines here and then you bring it down. So you do it for this and for that. And we also already know the double entry. We know this and this and this need to come to a bank account on the debit side. On the 15th, you will just have ordinary shares, preference shares, and share premium on the debit side. Now, before we go to your exercise, do we have any question? Because your exercise is going to be exercise 6. What happened here? Okay. It's going to be exercise 6. It says journalize the issues of shares, but it doesn't matter. Good. Can we quickly do this? Exercise 6. I'm going to give you 5 minutes. That's not even a lot. Let's get started, unless if there's a question. Rejoice, there's a question, or the hand is just not put down? Okay. Can we start with exercise 6 quickly? The only amount I'm going to be interested in is the balance carry down amount. Then we move to calculation of dividend. So that means you need to balance it so that you can give me how much is the balance carried out. Okay, looks like Moses has a question. How can I help you, Moses? Okay. Tuhafa? Does Tuhafa has a question? Looks like you can't type. Maybe you can't talk because probably you have not changed your age like it was advised. If you have a question, just type it on the group. If you are not able to talk, you put your question on the group. Hilma also seemed to have a question.
So for our preference shares,
Yes.
it says that our balance for preference share capital is 50,000. And
Yes.
then the shares that the company issued was 60,000. Aren't we supposed to take the 50, the remaining shares minus the new shares? How far?
Okay, let me quickly run you through there. This 50,000 is what the company already issued before. So before they already issued 50,000. Now here, how many shares did they issue there? You take the 50,000 divided by their price. If you take 50 divided by that price, it means they issued 100,000 shares before. For 50 cents, that's what vote is 50. That was now before. But now they are issuing more shares again. They are now issuing, remember, they only issued 100 so far. They have an authorized share capital of 50. That means they still have 200 to issue in future. Now, from that 200 that was left, they still have 60 to issue, which they are issuing now.
Okay.
You get what I'm saying?
Yes, sir. Thank you.
Okay. If we cannot hear you, you might just write on the group your question, then I can find it here. So there's no question yet. It's fine. Once you finish, please put up your hand so that I know what time to continue. Just put up your hand once you are done. Okay, Haley is done. Alicia. Caria says Sama Alberto, perfect. Moses. Chambula. If we can have at least 70% of the people done, then we can start giving the correction. Susanna Despanda, Nicole, Nakola, Juanes, Aina, Lina. Okay, that's good. Grace, Leide. Blessing. Okay. We have quite a number of people that are done. Like I said, this exercise, it's something that I would have expected for you to already know. So we are just going to give the correction. So I'm going to lower all the hands, then you give to the correction. So I think it's almost everyone that is already done. Now, I just want you to give me the balance carry downs. How much is the balance carry down for ordinary shares that you got?
798,000.
792,000. Do we all agree?
No,
98.
sir, it's 798.
Someone has 798,000.
Yes.
Okay, let's see. Where did we go wrong? Remember, ordinary shares, you just take how much was issued multiplied by the par value. 120 multiplied by 1.4 gives us how much?
$168,000.
Okay, this will give us 168. Now what you do, obviously in that account, this is your balance brought down, and then you are going to add $168, and then it's in total it's going to give us how much? 700 and
798. 798,000.
798 is the correct one. So the person who got, yes. So the person who got 792, I hope you got where you went wrong. Next thing is the preference share capital. This is the balance brought down on the credit side. We are going to add 60,000 multiplied by 0.5. I think this is just 30,000. And how much did you get here?
$80,000.
80,000.
Okay, 80,000.
80,000.
Unless if you have a different answer. Then share premium. How much is the total amount? Maybe first give me the total amount. Then we don't have to go to how did you get there. How much?
15,000.
215.
16.
216. Okay. Do we all have that amount? Don't be scared of giving your amount. If you are not correct, we always rectify. You know that. So we all have 216, isn't it? I need a response.
Yes, sir.
All right. Perfect.
Yes.
Now, I believe we understand this. Just that this exercise is exactly like the other one. In a case where it says, like in this case, it says the authorized share capital is 500,000 at 150. But when you came to issue, you issue 180,000 at 180. So in this case, you just say 180,000 multiplied by still 150. You don't have to worry about this. Then you get your answer. And then for share premium, this is now where you still say 180,000 multiplied by the difference. The difference here is 30 cents. That's how you work it out. Now we are done with this exercise. I'm going to load the next exercise that has to do with the calculation of dividend. Okay, calculation of dividend. Whenever they say calculate total dividend, in most cases, maybe 90% of the times, they want you to take a figure for interim dividend, and then you must add a figure for this. Okay, let me just say interim dividend. Then you add a figure for final ordinary dividend. Now that interim dividend, sometimes it can also be preference, but I think there's an exercise that also addresses that. And then there's a figure for preference dividend. In most cases, these are the three figures. Now, the tricky thing about this question is preference dividend won't be given here. You won't be asked about preference dividend. It will not even be mentioned anywhere. It's because the assumption is you are supposed to know how to calculate preference dividend by taking 5% multiplied by the value. That is the standard formula for preference dividend. That means even though it's not mentioned in the question, preference dividend, if we remember the definition, must be paid every year before your ordinary dividend. So that means if you are declaring ordinary dividend, it's because you must have already paid the preference dividend. So even if it's not mentioned in the question that it was declared, it's because it was already paid, because it gets the preferential treatment. Now, to quickly go through the two dividends, just to quickly clarify them. The first one is preference dividend. Preference dividend, you do it the same way that you calculate loan or fixed deposit, if you remember. How do we calculate that? We just take a percentage and then we divide that percentage with 100, and then we multiply with the value of, let me just write it where it can be seen. You multiply it with the value of reference shares. Now, I'm going to highlight this word because it's very important. It's the value, not the shares, because remember, the shares are 200,000. And if we have to check how many they were issued, you'd say 200 divided by 20 by 0.5, which I think is 80,000. You don't say 5% divided by the number of shares. It should be on the value. The percentage is always on the value. That's why I started by saying, do it the same way that you do for loan. Do it the same way that you do for fixed deposit, where you say it's the value of that fixed deposit multiplied by the percentage of 100. That is how you get the preference dividend. Now, how you got the ordinary dividend? You do it the same way. Actually, in two ways, sorry. The first way, you do it the same way as preference dividend. The same way as preference dividend. That is number one. Which one is this number one? If the ordinary dividend is in percentage, if they say ordinary dividend of 2% was declared, if it's in percentage, then you do it the same way that we did preference dividend, where you take the percentage of 100 times the value, not the number of shares, times the value, because remember I told you percentage must be on value. This is the first instance. The other instance, which is the last one, is when ordinary dividend is declared in cents per share. When they say cents per share, the moment they talk about cents per share, then in this case, you are going to multiply with the number of shares. In this case, what you are going to do, let me just write this one down. Here you take your percentage over 100 multiplied by the value of ordinary dividend. But here, what you are going to take is, you take the cents multiplied by the number of shares. By the number of shares. Now, sometimes a question on number of shares issued, sorry, this word issued is very important. Now, sometimes the question is not going to give you the number of shares. You see, like in this case, the number of shares are not here. But if you can remember our first exercise, the things that we just ended now, all we do is, we don't know how many shares were issued, but we know each share is $2 and the value is 300,000. Then all we do is we just take 300 divided by the nominal value. Then we know the number of shares that were issued were 150,000 shares. How many shares were issued for preference capital? I mean, for preference share capital, again, you take 40,000 divided by 0.5. You always divide. I think this one is a grade 6 knowledge. Then you are going to get 80,000 shares issued. This one is 150,000 shares issued. So these are the two ways. Now, let's get the answer. Additional information. Okay, before we go to the additional information, interim dividend was 12,000. Now, I made a mistake here because I didn't indicate. Is it interim preference or interim ordinary? So in this case, let us assume that it's interim ordinary. So in other words, every time when you find interim, but in the exam, at least it's going to be specified. But in this exercises, when you find interim dividend that is not specified, assume that it's ordinary dividend. So like I said, you total dividend, like I said before, you look for three things. The first thing is how much is the interim dividend. The next thing that you are looking for is how much is the final ordinary dividend. And then the third thing is how much is the preference dividend. Now, the interim dividend in this case, it's given. They said it's 12,000. Final dividend. Okay, let's go to preference dividend. Preference dividend is easier to calculate because you do it the same way you do for loan. Now, what do I mean by the same way? The percentage will always be given. That at the opening statement here, or as part of the information, the percentage will always be given. So you just take the percentage multiplied by the value, not the number of shares, by the value. So if we multiply that, can someone just take out a calculator quickly so that we can get the figure? How much is it?
2,000.
2,000.
2,000.
Yes, sir.
Can be 2,000. Okay, maybe it's 2,000, 20, 50%. Okay, good. Now, then so we know our preference dividend is 2,000. Now, final dividend, we have to check. Did the question give it to us in this way, or did the question give it to us in cents? Is it in cents per share, or is it in percentage? We come and check a final dividend of 0.5. This is 15 cents. Because sometimes the question might say 15 cents. Then you have to divide by 100. I don't know how I must teach you that one, but most of you have AS, so you'll be able to figure that out. It's 0.5 per share was declared. So in that case, what you are therefore then going to do, you say the number of cents is 0.15 multiplied by how many shares did we issue. Don't divide with 300. Don't divide by 300. This is money. 300 here is money. You must find out how many shares were here. If each share is $2 and we got 300 from those shares, it means the shares that were issued were by 150. So here you are going to multiply with 150 shares. And how much are we going to get here?
22,500.
32.
22,500.
22,500. So then our ordinary share capital here is 22,500. Total dividend, then you have to add up all three. That's going to be a total dividend. Now, I need to show you when there is preference interim dividend for preference, because that comes a little bit different. Now, remember here, we have interim dividend. Or let me explain it this way. With ordinary shares, you can pay them in the middle of the year, a certain figure, like here, but end of the year, you still pay them a certain figure. But with preference shares, if there was an interim dividend of 500, then here, it has to be, in this case, the 500 interim plus 1,500. Because according to the percentage, they cannot get more than 2,000. They cannot get more than 5%. So if this was interim, then the final must only be the remaining. But in any case, you just have to use the percentage anyways. You don't have to worry about what is interim, what is what. Just take the final percentage multiplied by the number of shares. It might only get trickier, which I don't know if it will get trickier for you in the exam, if there were shares for preferred shares. Let me not even go there. Okay, we'll do one exercise and then we will go to the next topic. Okay, we are going to do this exercise. Which one can we do? We're going to do this one. Just check that this amount is together, 800,000. Let's quickly do that. I'll give you 5 minutes. Please raise up as soon as you are done. Total dividend.
Sir,
Yes.
my hand has been up the entire time. I didn't
Okay, let me check.
I didn't calculate when I didn't get it when sir explained to calculate the value of the shares.
The value of a share.
Yeah, like the percentage of 100 times the value of, for example, preference shares. I didn't get that part, how to get the value.
Okay. Okay, now I'm not going to erase to take off this one because it will disturb others. The others can just continue. I just need to show you. Now, the value of a share, I don't really get. Is it the formula for preference shares that you are finding, that you want to find out?
Yes, sir. I want to know how to find the value. You said we're not gonna take the number. No, yeah, I want to know the number.
Or the number of shares?
Yes.
Okay. Now, if they say balances are given, the rest of you can just continue. Balances on 1 August 2025. And then it says preference shares, in most cases, they will say, okay, let me just make a mini example here. The authorized shares are, maybe it's 500,000 ordinary shares, and then it's 300,000 preference shares. Now this one is maybe at $5, and this one is maybe at $2. And then they say balances in the books on one. Now the balances, maybe here we have, just give it an example. If it says that the ordinary share capital is 650, this is in dollars. And then they will say that the okay. Now with preference shares, this is maybe 8%. Okay, are you there now?
Yes, I'm here.
All right, let's start. Now with preference shares, the percentage is always on the value. And here, the value is already given to us in money type terms. So you just say 8% of 100 multiplied by the value. But when it comes to ordinary shares, if they say it was declared on 15 cents per share, you can't say 15 cents multiplied by this thing because this is not shares, this is money. So we need to find out how many shares were issued. The authorized, there were 500, so that's not everything that was issued. In order to find out how much was issued, you take 650 divided by 5. 650 divided by 5. Even at preferred shares, if you need the number of shares, even though you are not going to use them, you take 220 divided by 5. That's how you are going to get the number of shares.
Divided by 2 for the preference.
Yes, thank you. Divided by 2 for the preference. So how much is that?
For the ordinary shares, it's 130,000.
Yes, for the ordinary shares, it's 130,000.
And then for the preference shares, it's 110,000.
It's 110,000. Perfect. Those are the number of shares. But like I said, for preference shares, you don't need to know the number of shares because you are not going to use them anyway. But for ordinary shares, you might have to use it if it says per share. How many cents per share?
Okay.
All right.
Yeah.
Okay, the rest of you, the moment you are finished, you raise up your hand so I know when everyone is done. Mateus is done.
Yes, yeah,
I'm not
actually,
sure. You have a question? Yes. If you have a question, don't raise your hand. Just unmute, because the screen that have the hands and the screen that has the people is different. Yes. What's the
Yeah.
question?
There is no
Yes.
price for preference share. There's only a percentage for calculating dividend.
Excuse me.
There is no price for the preference shares.
There's no price because the preference shares, is it not here? Oh, okay. You mean here? Okay. I need to edit this one. Thank you for this one. I just have to go and edit this one. So this one was $5. Let's make this one $3. Sorry, let me just do it now. Otherwise I will forget. Calculation of dividend. The price is there. If you have a question, just unmute. Otherwise, I will not see anything. I will not see what you are asking. $1, the price is there. Here we say the price should be $3. Okay, Hansa is done. Frederick is also done. We wait for everyone else to finish. Lloyd, Haley, okay, someone actually asked what's the selling price of We have 12 people that are done, so we'll wait for, if we can get 8 more, then we can just give correction. So in total, how many are we? So some people, I think, left. Okay, so it's enough people that have put up their hands that they are done. Can I find out how much is the total dividend? Someone? Can someone give me the figure that you got for total dividend? Hello? Can you hear me? Or at least write it on the group if your mic is not working. Total dividend amount, so that we can move on. My learners, can you hear me? I need the total figure 85. Okay, I can't talk, but my total, okay. Looks like many of you cannot talk. Okay. But people got 85,800. If you don't have that one, just write the correct amount on the group so that we can see if we have the same amount or we need to calculate again. Is there anybody who doesn't have 85,800? Since you can't talk, I think you need to put it on the group.
So I don't have 85,800.
Okay, how much do you have?
$159,000.
151,000. Okay. So if we have two different amounts, it means we need to find out, do we have interim dividend? We don't have interim dividend. We only have final ordinary dividend. Someone put another figure on the group. Someone has 42,600. Someone has 85,800. I didn't expect that you guys were going to get different figures here. But let's see, final ordinary dividend. We find out how much we actually have interim dividend. The interim dividend, we have it here. An ordinary dividend of 15,000 was paid during the year. This is interim dividend. So we say interim dividend is 15,000. Final dividend, let me put it at the end here so that we can use this part for calculation. Final dividend, we find out that it's 9% of 100 multiplied by the value that was issued. Now, how much is the value that was issued? The value of the ordinary shares is 600,000 shares multiplied by, even though they were issued at $6, you ignore the $6 and you only concentrate on the $5. Times 5 gives us 3 million. Okay. 3 million Namibian dollars. This is the value. Now, how much is 3 million multiplied by 9%? You know, these figures are very, very big figures, but like I said, I just took them from the head for us to understand, not that it should be. So it's 9%, 300,000. How much is 9% of that? Is it 300, not 300,000, but 3 million?
270.
How much do we get?
170,000.
100 and
270.
170.
270,000.
Okay. And then after that, we are going to have preference dividend. This one, we have to take the percentage, which is 7% multiplied by the value. The value, how much is the value of preference? That one I'm not now going to show you. Someone got 102,000. Someone got 47. Yo? I'm so
32.
curious to see what you have written. Okay, how much is the value of the preference shares?
32,000.
82.
32.
The value of the preference, the value, the number that I must multiply with 7% in monetary value, the preference share capital.
240,000.
100 and?
So it's 7% times 240,000.
Is it not $3 times 130? I mean 160.
Yo, so I really don't know.
480,000.
280,000. 160
Oh,
times 3 is 280.
280,000.
Let me just check.
So how did we get that amount?
I'll just check now. 480,000. Yes. Because remember, preference shares, how many shares were issued? There were 160. They were issued at how much? They were issued at $3. If we multiply the two, that's how we get 480,000. And then the dividend is therefore going to be you must be able to give it to me. How much?
Yep.
You guys, you're silent sometimes. Can get very discouraging. Okay, we have a point. I don't like giving points. Will be there.
33,600.
$33.
Yes, sir. 33,600.
33,600. Okay, now then how much is the total dividend? The correct total dividend.
$318,600.
Okay, 318,600. Okay, this exercise here, I don't know if I'm scared or I'm disappointed, because I hope everyone can see where they went wrong. Because if you cannot do the exercise that we did, that one of recording the ordinary shares, you won't be able to do the calculations, because for you to calculate, you need to know how much is the share capital, or how many shares they are. And I don't know where you guys were getting it wrong. The idea was for us to move to this, because last year we had the recording of shares, but this one, the last time that it was in the exam was in 2022. So maybe it can be asked. This statement of financial position, okay, I can't remember, but I don't know if I have seen it many times. There are stronger chances that things like this can be asked. But if you cannot do the first part and the second part, we won't really be able to understand this too. So what I'm going to suggest is, I'm going to give you these exercises, because company accounts is very important, especially for the exam. And you start from the beginning, you record, not this one, this is dividend. We are going to start here. That's why I made the exercises a lot, so that you can practice. Even the ones that we have already recorded, record them. I know the exam is starting. If you can record them today, please record them today. You record, and then you send me the solution. Then next Saturday, I believe you'll be able to know how many shares and so on. Then we can now do the statement of changes in equity and the statement of financial position. I know some of you are writing tomorrow. If you cannot, and maybe it might now disturb your studying, but please take time to record these things. Maybe it will take you an hour or so that we can go through them next week, Saturday. 1 hour, if you understand, it will become easier. I'll send them on the group now. For now, we'll have to end here, because because even if I explain this, it looks like you guys still don't understand the issue of shares. All right, we will end here until next week, Saturday.
So,
Yes. Yes.
sorry, Sam. I've been having problems with network. So what
Yes.
did you say? So what did you say in the last part? You said we should practice.
What I said is then the next part, the statement. Yeah, statement. Yeah, I'll give you exercises on dividend and issue of shares to practice. Then I'll send you the solutions. And then once you notice that you are correct, you can ask if you have a problem, if the solutions are not matching up, or if you figure out where the problem is next week, Saturday, then that's when we can do statement of changes in equity and statement of financial position. Because even if we do it today, I can see you guys don't really understand the issue of shares properly yet.
Okay, thank you.
All right.